Hello traders, welcome back to Lady Africa Forex YouTube channel. It is very difficult to build a successful business when you don't know where to start. As a Forex trader, the first decision you need to make is to write down a business plan. This will make you have a deep understanding of what it would take for your business to grow. A Forex business plan helps you to achieve your goals. Today, I have an outline that can guide you on how to make a simple trading business plan. Let's see how. So let's look at how the trading business plan is prepared. I have 6 items here that you can include in your trading plan. The tradable items, what time do you want to trade, trading days, what action do you want to take during your trading session, the trading rules that you have set, and how can you handle your risk management skills. So what do you want to trade? There are so many tradable items in the market. We have currency pairs like GBP, Euro USD. We have metals such as gold, silver. We have indices such as Nasdaq, US 30. And of course, you also have cryptocurrency. It's important to choose at least 3 currency pairs to follow so that you can be able to know how they behave, their cycles, their dynamics. Then it makes your life easier when you're doing analysis. You know at what point during your trading session are you going to execute a trade, or whether you're going to stay off the market or not. Item number 2 is your trading time. Of course, the market opens 24 hours a day from Monday to Friday. It has 3 sessions. There's the Asia session, the London session, and the New York session. So using New York time, Asian session starts at around 8 p.m. to 3 a.m. New York time. Then London session starts at around 3 a.m., goes all the way to 9 a.m. New York time. Finally, the market will close with New York session, which starts at 9 a.m. New York time, and it will close at 5 p.m. New York time. They run at least 6 to 8 hours a day, so you will never miss a trading session depending with your needs. If you're an early person, or if you have a day job where you want to go work fast, then come and trade in the evening. Depending with where you're coming from and depending with your timelines, you can check which session works best for you. So choose a trading session that meets your needs, that fits your lifestyle also. Another issue is the trading days. It's important to know that the market opens Monday to Friday, 24 hours a day, like we said. So you can trade any day except holidays. Usually when there's a public holiday, there is no much activity in the market. So this is the time that you might decide to rest or stay off the market. Next item you want to consider is your daily plan of action. So whenever you start your trading day, what happens? What do you want to do? And how do you end your trading day? The first thing to do at the start of your trading day is to check for news. News are very important, and news affect the market dynamics, the currency pair dynamics, and the behavior of price movement. The first thing is look at the currency pair. If your currency pair is maybe Euro USD, you might want to know what's happening in Europe. If your tradable item is paired against the USD, which is America, you want to know what's happening in America. Do they have any activity going on in America? If your currency pair is paired against, let's say, Australia, that is the AUD, check for Australian news. So that is what we call fundamental analysis. Check news, get your fundamentals on check. News affect activities of the market. News affect the dynamics of the market. news affect your tradable item. If you're trading USD pair, then you know what to do. So having fundamentals at hand will influence your decisions during your trading session. It will tell you where is the price at, which what are you looking, what is your projection, are you looking to buy or are you looking to sell, depending with what is happening. Secondly, review your charts. Do technical analysis on your tradable items of choice before you start trading your trading session. So when it comes to analysis, you have fundamental analysis and you have technical analysis. They all work hand in hand. Do your top to bottom analysis from a higher time frame. Look at the 4-hour time frame chart, see what is happening there. Zero down to 1-hour time frame, see what is happening there. Then, if you find your point of interest, then go to the 15 minutes chart and see where your entry should be. So when you're doing your technical analysis, you're looking for zones, you're looking for supply demand areas, you're looking for trading setups opportunities. For example, if you look at 4-hour time frame and then you find a zone, a supply demand zone, and then probably the price is below this area, so you find something like a rally, then it forms a base here, then it continues rallying. Go down to the 15-minute time frame. If you go to 1-hour time frame, you'll find the same behavior. Then 15 minutes time frame, you also find the same behavior. Then when you're at the 15 minutes time frame, that is when you're looking for uh, entry. And then you decide if it's rally, base rally. Do you want to enter here, put your orders there, or do you want it to rally, come, retest, then now put your entry here at the point of retest, depending with how the currency pair always behaves. Because there are some currency pairs which they will rally, base rally, and don't come back to retest. However, there are at times where the market might want to retest. They will rally, base, rally, retest. Then you can get your entry at discounted areas here and then buy, execute your trade. So these are the things you want to check during your when you're working on your daily plan of action. You want to do your analysis to check what do you want to do during the trading session. Then of course from there you're going to implement your strategy. If you already found a setup, an opportunity, then you want to implement your strategy using the rules that you had set. Rules for entry, if you want to wait for a confirmation candlestick pattern like an engulfing pattern. Rules for risk management, what percentage do you want to risk at that trading session? Rules for your exit, how many pips do you want to collect during that trading session? Then you implement your trade. Then the next item that you want to look at is your trading rules. Item number 5. Every trader has a trading rule. Every strategy has rules. So set your rules according to your strategy. Know what to do when you're at the market. Know what you want to do, what you're looking for. If it's a trade setup, you know how are you going to confirm your trade setup. And then trade ideal setups. Don't guess, don't be impatient. So that now there's a setup that looks like it's going to conform to your rule, but it did not give you that confirmation. So just trade ideal setup. If the setup is not ideal or has not fallen in place according to your rules, then stay away from the market. So once you achieve your goals from the trade, exit the trade. Follow your exit rules. It's recommended to take at least 3 trades maximum per trading session. But all this also depends with your personality, depends with your bank account, your trading balance, and many other things. So try to aim at 1-to-1 ratio or 1-to-3 ratio. The less trades you take, the better for you because you're minimizing the risk of losing money. Remember, every time you enter the trade, you're taking a risk. It might go your way, it might not, because trading is a probability. You're dealing with probability of the price action. So not all the time, the market is not perfect. So it may not always give you those ideal trading setups, or the probability might not always check in. So how much do you want to lose? The more you take trades, the more your chances of losing. So minimize your risk by trading, getting very minimal trades, 3, 4, 5 trades maximum, then get out. Lastly, but not least, number 6 is the risk management. Of these six items that you're going to pen down in your business plan, the risk management is the most important. Although I've put it last, but it's actually the first thing, because before you trade, the first question you ask yourself: how much do I want to lose, or how much am I comfortable losing? So risk not more than 2% of your account balance. If possible, take partial profit. So whatever your account balance is, calculate 2%. Don't go beyond 2%. Then if you want to take partial profits, it's recommended you can do 1-to-1 ratio. That is, whatever your stop loss is, percentage of your stop loss should be the same percentage of your first take profit. So when you enter the trade, then you put your stop loss. For example, this is your trade entry here. You decide to put your stop loss here. So the percentage that you put here should be the same percentage that you're going to take your first partial profit here. So if it's 1-to-1 ratio, then once you get to the ratio here, probably this is 50 pips, then you can take your first profit, then let the trade continue all the way to 1-to-3 ratio. Then how do you do that? You uh, move your stop loss. Once you take your first profit, you move your stop loss to break even. So when you move your stop loss to break even, then you allow the trade to continue all the way to 1-to-3 ratio. So once you achieve your 1-to-3 ratio here, then prepare to exit the trade. Use your goals to exit the trade. If your goals for the day was 100 pips and you've been taking partial profits, as soon as you hit 100 pips, exit. Use your script, your exit script, to exit the trade. Do not allow emotions to stir up in you. Probably you've already achieved 1-to-3, and the trade still goes in your direction, and you think, maybe let me linger on, let me continue collecting more pips. No, just exit. If you're trading and probably your probability did not go well according to your predictions, and the trade took a different turn and you end up losing, then give yourself a maximum of 3%. Stop all trading for the day if you lose more than 3% of your account. Close the business for the day, wait for tomorrow or the next business opportunity or the next trading session. Then it's advisable to compound your profits, where you increase your trading volume using a lot size spreadsheet to grow your account. So if you made $10 today, you can take half of it as your paycheck, and then the other half of it you can leave it in your bank balance, so that the next trading session you have a bigger volume. So if today you are doing 0.02, volume of 0.02, and you made some profits, then when you come back to your next trading session, then you can increase your volume to 0.03. Definitely the higher the volume, the higher the profit. So compound your profit so that you can grow your account, you can have bigger volume, and eventually you get more profit. So that's how you grow your business. So learn to take a paycheck periodically, even if it means daily. If you had a profitable day today, you made $10, definitely pay yourself. Take $5, transfer it out of your business account and put it in your e-wallet. Then the other $5 dollars, let it grow for your next session. So pay yourself. This will also motivate you because you're seeing the results of your trade. So that's it with the business trading plan. The 6 items, definitely, as you make your own business, you can tailor it to your needs because it's you who knows your personality. So make sure the business plan works well with your personality, your lifestyle, your bank account, your goals, and your expectation from Forex trading. So I hope you can now make your own business plan. Remember, it's a very important tool for a Forex trader. It will help you to be consistent and give you a sense of direction, and it will help you grow your business. Don't trade without a plan. Thanks for watching. Please DM us if you want us to discuss about any topic on this platform. And here at Lady Africa Forex YouTube channel, we offer mentorship to beginners and to struggling Forex traders. See you in the next video.